Well, hello again, traders, and welcome out. This is Ankit from Maverick Currencies here, and this is a quick video on the Japanese yen outlook. As you can see, the yen has been quite a mover since the FOMC rate statement, and usually we actually expect more of a movement from dollar. But this time around, it has definitely caught traders by surprise with the amount of activity and the amount of reversal that we have seen from the Japanese yen. So I think this is a good moment to take a look at yen because are we about to see a regime change? Are we seeing a change in a trend? And those are the questions that we need to kind of answer here, because you can see, if looking at this chart here, I mean, the last 2 days have been pretty robust. I mean, we got this reversal right over here. And with that, we have seen pullbacks, pullbacks, and rallies. So that's a pretty good trend changing movement. Now, let's study the yen basket, and then we'll start to break down some of the yen crosses individually. But looking at the yen basket, you can see that we have been in this downtrend for the longest time. And we have seen almost about this descending triangle that we were about to embark on a bit of a breakdown. So you can see right here, at this point, we could have seen a breakdown as we were almost getting ready to touch that support. And right around that time, we get this big massive candle, and this is again post the FOMC, and then we have a follow through in the last 24 hours. So at this point, we have been in this massive downtrend that has been now trying to correct to the upside. And as you can see, we saw that rally back in April to early May. I mean, at that time, we didn't get above that downward trend line, and here we are trying to break above it. So at this point, I think we have to now consider that maybe the yen is trying to make a shorter term reversal, or maybe it's trying to put in a bit of a pause in that downtrend and try to make a reversal higher. So as you can see that where we are right now in the Japanese yen crosses, and again, looking at the average of all the major yen crosses, we are testing the resistance that we test like almost last month on the 13th of June. So that's where, we had the FOMC 15th of June, and then we can see that we saw a massive reversal after that. And here we are testing that resistance again. So if this is a regime change, I mean, this is where we need to now be more looking to buy the dips instead of selling the rallies. And if you look at this level here, I think there could be a much powerful move once we can get above this resistance point right over here. I mean, this is above this area is where we can actually have a lot more room to run. As you can see, the rally, the breakdown that we had from late May to June, I mean, this is where we can actually see that change. So we have to be very careful with trading the yen here, because we are seeing a lot of that volatility. But one thing to keep in mind is a lot of these pullbacks are just buying opportunities. I mean, just not just on a one single instance. We had the movement here, we got the movement over here, and then here we are getting another pullback. So we are towards the end of the week, so we probably just see the yen consolidate gains here. So the question really I've been getting is, what changed for the yen? Why yen is moving? And I think this is something that you have to kind of take a deep dive into the yields, the bond yields. And I think that's something that has really been overlooked, and that's where the biggest move has been coming from, or being a leading indicator, is by looking at what the bond yields are doing. As you can see, this week there has been a massive drop in the yields, and as you can see that right now the Japanese yen yields actually backed off quite aggressively. And I mean, remember where we were back in March before the yields took higher, you actually went higher. I mean, you can see that the yields have been on this uprising, and then the more and more the yields are pushing higher, more and more Bank of Japan then has to print more money to then fight that 0.25% as a ceiling. Anything that gets above that, the bond yields, and they have to go and print more money. And right now we're seeing the opposite, where things are actually falling down. And actually, for the first time since January, since the beginning of this year, we actually now testing the support area of that 200-day moving average on the bond yields, a 10-year. So this is a solid improvement. And you can see, I mean, the last 24 hours, I mean, there's a 10% drop in the bond yields out of Japan. But outside of anything else, I mean, we haven't really seen a big drop. I mean, we are seeing a downward trajectory, but the yen was the biggest one that seen the change, which was necessary for all the yen shorts. to kind of take a little bit of a breathing area. So let's take a look at some of the individual key pairs, because I think this week we have made some turnarounds that we have to now be careful about. I mean, take a look at this on a daily chart. I mean, look at the very aggressive downward trajectory for the dollar yen. We almost went down to 132.47 to only reverse back up to 134.37. So nice reversal, nice little support off that 50-day moving average. So if you are trading the dollar yen, I think this is a shorter term is giving you a pause, but in the next week, I think this is something we need to keep an eye on. I mean, the dollar really hasn't weakened as much. I mean, we did this video on the dollar outlook, and we looked at dollar, and dollar was not really having any move since the FOMC. So most of the movement was in the Japanese yen. So this is where, if you're looking at the pairings, the dollar yen might not be the best pairing today. But if you take a look at outside of that, I mean, let's go in the Aussie yen. I mean, massive moves across the yen crosses. As you can see, I have this upward ascending triangle, and we actually broke that. So this is still a 2-day move, and we still have a lot more to come for this. I mean, you can see that this is a massive trend that has taken place, I mean, since March, the last few months. So I love to see these regime changes, and that's when you have to now start looking at things differently. Not every time, like in the past, you look at these pullbacks to buy into. Maybe this is the time where we need to start looking at things differently. And that's something that we need to be focusing on in the coming months, because yen, as you can go back in monthly and long-term charts, we are at the levels that we haven't seen for 10 years. So, I mean, whenever you're at these extreme levels and then things are about to change, then there's a massive repricing that needs to take place. And we saw the same thing across the board. Like, look at CAD yen. I mean, CAD yen looks very similar to the dollar yen, but Aussie yen has been a big mover to the downside. I mean, Euro yen, it's almost get back to the May lows. Now we look at Swiss franc yen pulling back. We have the Kiwi yen, which is very similar to the Aussie yen. As you can see, there's been a bit of a pain for these yen crosses to reverse. So you can see that if you look at the price action since the FOMC, I mean, the markets have been actually gaining. So it's not a risk-off trade that's really driving the yen higher. And it's not really the big movement in the dollar that's just driving it higher. I mean, look at the dollar actually bouncing very nicely off that 50-day moving average, something that we talked about yesterday, that this is a very important level that we haven't really given up for the past few months. So we've seen a nice little breakdown overnight and a bit of a reversal today. But the yen remains that focus. And as you can see in this chart here, on this daily chart on the yen basket, I mean, we are in this downward congestion zone, and once we can break free from that congestion zone, then there's actually a lot more further upside in the yen and the yen crosses. So if you're trading the yen, I think you have to kind of keep an eye open for all the yen crosses and see what's performing better and what's performing worst. I mean, right now we are seeing Aussie and Kiwi being the worst. And again, this is where Kiwi remains the worst, and an Aussie is, unable to rally off of that. Is still in this downward trend here, and is backing up very nicely off that downward trend. And in that case, Aussie yen, Kiwi yen remains a good candidate for this to break down. I mean, look at the 50-day moving averages giving up as well. So those are a bit of a line in the sand that you can draw and say, well, this is where I'm no longer looking to buy this to the upside, because now the technicals are breaking down. So just want to bring this up here as we are in this bit of a change of that regime. And, this is still a 2-day move. And then a lot of traders sometimes look at this and say, well, the big moves already happened. But you have to kind of keep in mind in the next 24 to 48 hours, I mean, we have the weekend coming ahead, but next week we could see some sort of changing movement, and that's where you start to see some bear rallies to sell into. I think that could become a newer trade. But till then, we have to kind of look at all the options and see which way or the timing for the trade. So after a big move like last 2 days, maybe some consolidations are kind of coming in store for the yen crosses. But after that, I think we have to kind of take a look at where the yen is about to move next. So stay tuned and keep up with your relative strength and weakness analysis. Thanks, everyone. See you guys in the next video.